Dustin, episode 15.
Is it 15? I was
Isn't
paying
that crazy?
attention. That is
Yeah.
crazy. Honestly, you could have given me any number. I would have been like, that's crazy. You know?
But 15 is almost 4 months. I feel like it just doesn't seem like it's been that long.
No, it doesn't. Wow. That is crazy. So we have a lot to talk about today. We both have portfolio updates. I want you to do a little earnings recap now that we're like a week, 2 weeks out from a lot of your companies reporting. We have Rocket Lab and ASTS reported this past Monday, so a little bit of a space race going on. We're going to break down that. And we have RJ, Rivian CEO, has a new pay package, and it's a little similar to Elon's. And we need to get your thoughts and opinions on that as well. So let's start with my portfolio. As I think we all
Let's do it.
know, Bumble took a little bit of a hit after their earnings last week, and it hit my second entry target, my second in theory final entry target, which was $4.23, I believe. My first entry was $5.23.
Had you put
So
a limit by order for that amount, or
So the way I like to do it is I just set a price alert, so I'm notified whenever it
okay,
hits, whenever a stock hits a certain price, and then I have to like make the final call,
gotcha.
because you never know why a stock is going down or up, and I just like to, audit everything before I make a purchase because
Yeah, that's a good
sometimes
way
I'll
to do
change
it.
my mind, but most of the time, I follow through with whatever I kind of intended.
Yeah,
So, so you could see on Savvy, where it has like my little face with the line, that's my average price,
yeah,
which is $4.68. And then where I bought is like kind of at the bottom of this first dip. And then it continued to kind of go down throughout the last week.
yeah.
And, I was all excited buying into Bumble, lowering my average price target. And I thought you were going to come in with me. And then you didn't take advantage, you didn't buy. What
Yes.
happened?
Okay. So when we were live going over the earnings details last week on Wednesday during the episode,
Yeah.
there was the one surprise for me, which was the Q4 guide was down 17% compared to a year ago. And all the quarters have been down roughly 10%. So it was kind of like surprising as to why, if it was down 10%, I would have been like, okay, that's in line with, the typical sort of move that they've been doing. Since it was down 17%, that got me to pause. I contacted investor relations. I'm like, hey, I want to I want some answers to some questions I have. Got a call with Kevin, their CFO,
Oh, that's
which
cool.
I was very appreciative that they set that up. And I got a bunch of my questions answered, and I'll sort of go over all the details, and I'll tell you what I plan on doing after I go over all the details. So there is so much to love with Bumble. So I'm going to start there, and then I'm going to talk about some of the things that I don't like, and then
Okay.
I'll tell you what my plan is. So the first thing is that they are a cash-rich company that's generating cash every quarter. That's a pretty big deal because they're not a company that's about to go bankrupt. That's just like off the table as far as I'm concerned. At least my view is that this is not a company that's on the verge of bankruptcy or is going to close down. Interestingly, companies that don't have profit yet are far more likely to, to go bankrupt than Bumble is. So they increased their cash from last quarter from 261 million to 307 million. So that's a cash increase of roughly $56 million. So their cash add very much in line with what I was hoping, or like that they would add another $50 million of cash. They sure did. That was fantastic. In As part of their earnings call, they also announced that in Q4, so in this quarter, this has not yet been released, but they did announce it, that they are going to buy out this tax receivable agreement or TRA agreement that they've had with some of their shareholders that is essentially debt, and they carry it as debt on their books, a liability of roughly 400 million that has been on their books, and they're going to buy out that TRA, tax receivable agreement, for a one-time payment of 186 million. So that's going to decrease their cash pretty substantially, but I think it's a very good thing. They're still generating plenty of cash, so they're, them depleting their cash a little bit to get rid of this $400 million of debt is a pretty big deal, and they get rid of $400 million of debt for 186 million. So that's a great freaking use of their cash, and it actually increases their cash flow in the coming quarters, and they should be able to generate more cash. Obviously it reduces their, initial cash from 307 million. If you reduce it by 186 million, that it's going to be down to 120 million ish. And then from there, it'll be whatever they added in cash for Q4.
And
so
does this mean that their earnings for this following quarter are also going to not be great in regards to like EPS is going to be like kind of wildly off from estimates? Because
well,
normally
what's
that happens
interesting
with these
is
tax payments.
it's not a tax payment. So this is a reduction of debt. So if anything, and I asked Kevin this, and I think he hadn't thought about it enough to give me a correct answer, but because he like, what my expectation would be is that this would have actually 200 and something in the neighborhood of 210 $220 million positive impact on one-time earnings, not really business related, but it's just this, you got rid of $400 million of liability for 186 million. So there's roughly a $210 million positive impact to your balance sheet. I think that's what it would do. Now, when I asked him that, he actually said, I don't think so, but he also like kind of caveated it with that he may have not thought about it enough. So um, I don't think it's going to be a negative one-time impact. If anything, it would be a positive one-time impact, or that would be my read. I'm not an accountant, so
Right.
take that with a
I
grain of
know it's
salt.
sometimes, murky.
Now, I'm like reading through my notes. One of the one of the other things that I love about this, forget the cash thing. One of the other things that I love about the company is that on the call, Whitney talked about their new AI initiatives and AI product line that will be a standalone product. So there's a possibility that Bumble's AI product, which this is a company that basically has an incredible amount of domain knowledge about what women want in particular. Obviously, also what men want, but I feel like a lot of sort of people have been focused on the men's side of things. Bumble is very much focused on the women's side of things. Using that domain knowledge, they do plan on releasing an AI product that is going to do at least dating, but possibly other things as well. Now, she's not sort of revealing a lot of details on that, but one of the things that I think was mentioned in the earnings call was potentially doing group events or like activities that that women might want to plan together or do together. So this other AI-based product that could be partially dating, partially other things, could actually have a pretty substantial new revenue opportunity that might be additive to Bumble's future. So, let me pause there and say those are all the things that I love about the company. What are your thoughts on the stuff that I've said? And
I agree. I mean, that's why I've bought in, right? Because initially, when we were talking about Bumble for the last 4 months, I've kind of been on the sidelines, and the vision and all the pros have clicked with
okay.
me,
Yeah.
right?
So I
So,
mean, I
like,
like Whitney too. I mean, the fact that the founders there
yep,
has recognized that the issues with the company. One of the things that she's recognized, and this goes to the things that I don't like or almost hate, the Q4 revenue decline or expectation down to 216 to 224 million. This is what they guided to, is a 17% annual decline compared to like 10% last quarter. And this was one of my things with Kevin. I was like, why is there such a huge discrepancy? And this has to do with what Whitney had talked about from early on, when she came back on the, I think it was, maybe April or May earnings call, where she talked about how they're going to be very much focused on women's security. They need to make women feel safe. Therefore, they're going to focus on sort of quality members. There's going to be this push towards quality on Bumble. And that push started mid-quarter because they had to update their product. They didn't immediately do it. They had to, the August update in the Bumble product is what really started that push. And therefore, Q3 was only half of Q3 was impacted by this push for security and quality member. But all of Q4 is going to be impacted by it, which basically means the rate of new members being added to the system, as well as getting rid of low quality members from existing, paying members or whatever. The combination of those two things is going to be significantly greater in Q4 than it has been historically. So that is their explanation, their official explanation as to why Q4 revenue is declining substantially more than like Q3, for example.
Do you happen to get any hard numbers on that? Because that was my big question when we spoke last week, is like they in theory should know how many people they took off the platform versus people that left organically.
No, there's no hard numbers that were shared. Somebody else asked that on the earnings call, and they did not give a detailed answer there. But basically saying that this impact, but it should stabilize, and going forward, they expect to have taken the brunt of the hit in Q4. So I don't love that. I thought that it was already done. That was definitely a surprise, and that was the thing that has basically caused me to pause. Like if all else equal, and the expectation for Q4 was also in the $245 million revenue range, I would have been loading up on Bumble heavily if the price had gone down 25%. But I also think the price wouldn't have gone down 25% if that was the case. So that's what I don't love. But even with the decline in 17% revenue, by the way, they still expect to be profitable. EBITDA profitability, 61 to 65 million. So they're still going to add cash as part of their business operations. The net cash is obviously going to go down because of the TRA purchase. But yeah, so, and then the last thing I don't love about where they're at is that, of course, they have this $600 million of debt, long-term debt on their books, which they need to continue to make payments towards. They're going to pause substantial payments. It's not due, so it's not like they're in this sort of backed into a corner or anything like that. But and the rate of which they're generating profits right now, at least, and generating cash, it's plenty for them to have no worries from the $600 million. But that is a negative that's on their balance sheet. That just like the $400 million was a negative that was on their balance sheet. So those are the aspects that I don't love about it. So that's what has caused me to pause. And of course, the market's reaction going down, 20-25%, maybe a little bit more actually, is making it more tempting. So interestingly, as we get close to year end, and here's where I'm going to talk about what I plan on doing, and I haven't definitively made the decision, but there is this opportunity because I've had so much gains throughout the year on other stock sales that I could sell some of my higher priced Bumble. I don't want to reduce my Bumble position.
Yeah, I was going to talk about tax loss harvesting in a future episode, but yeah.
Okay, yeah, this is actually a good time to talk about it because it's November and you kind of need to start planning these things out. But basically, I've bought shares as expensive as $7 and some change. So if I sold some of those shares, I could be taking roughly a $3 per share loss against other gains, and I could technically buy back those shares 30 days after
30 days. Yep.
Right. Or I could do the reverse, meaning I could buy the shares first and then sell them 30 days from now. We still have time because 30 days from now will be like December, like mid-December. So both of those are possibility. I might sell shares and then buy 30 days later, or buy more shares and then sell them 30 days from now.
And if I remember correctly, if you did want to sell shares first, you have to wait until it's been 30 days since your last purchase.
You might be correct about that. So I might have to buy first before I
Yeah.
can sell them
Not
30 days
financial
later.
advice.
No, no, yeah, but no, I'm glad you brought that up actually, because I
Yeah.
might have not been able to do the reverse.
Yeah.
So,
I believe it goes both ways.
okay. And I might have to check with my accountant there. But in
Please
any
do.
case, so I might do a couple of transactions, but fundamentally, I'm going to keep the number of Bumble shares that I have until further, next quarter's earnings come out and guide, and we hear from Whitney again, or if Whitney comes on our pod and and we
A
get
little
some additional
foreshadowing.
questions, huh?
I said a little foreshadowing
Yeah,
or
maybe, but
manifesting.
manifesting
Um,
maybe.
yeah, the interesting thing about going back to the accounting and how that could maybe skew the numbers to the upside next earnings, that's kind of not great in regards to, like, we want a better sense of how the company's doing and, like, are they
Well, those are one-time activities that are, like, listed out, right? Kinda like the, what was it? The goodwill hit that they $400
right,
million goodwill hit they took last quarter. Now, their EPS was, like, negative $2 and something some change because of that goodwill hit, but if you looked into the details, you immediately realize, "Wait, this goodwill hit has 0 impact on the business." Like literally 0 impact. It doesn't have a cash impact, it doesn't have a business impact, it has no impact. It's just goodwill, which is like literally this fictional thing that you carry because of accounting principles, whatever, on your balance sheet. And if those assets are deemed to not be viewed as highly valued, you have to take the hit. They might have more goodwill hits in the future, by the way, because they still have over $1 billion of goodwill on their balance sheet, and that also might have a negative impact. But all of the one-time impacts can easily be like taken out and then evaluated on its sort of core. You can see what the core business is generating in revenues, in profits, how much cash is generating. All of that should be very transparent and visible. But so that's how I evaluate it. Um, Definitely, I was hoping for a little bit more excitement with Q4 numbers. And basically the way that it's shaping out to be, Bumble is like if this company is going to be on this sort of like upward trend from a revenue and profits perspective, that's probably not going to happen until the second half of 2026 and beyond, because the expectation that Whitney set on the call was that their AI product and some of those initiatives are not going to happen until mid 2026. So, take
yeah.
that. That's like the full picture of Bumble.
Yeah, my dumbed down view is, like, this I chalk a lot of this up to, like, this is a transitionary period of Whitney coming back and cleaning
That's
things
right.
up,
That's right.
and, like, maybe it's a little messy right now, but long term, I'm very excited about where the company's gonna go.
Yeah.
Um, we
That's how I
should
view it as well.
we should move on to, your earnings recap because we're already 20 minutes into this episode, and we only
Okay.
talked about one stock.
All right. Well, I mean, this is why we do these things, but we do deep dives. We do deep dives in.
That's right.
Oh, I forgot to send my comment.
Better late than
uh,
never.
yeah. Okay. So, what earnings were we going to talk about? You
So
bring them up so that.
so it's all everything that you hold. So Google, Meta, Rivian, Hood, all the things that have reported. Then we'll save Rocket Lab for last because that was the most recent.
Okay. So, yeah, I mean, Google basically crushed their earnings last week. I think we briefly talked about that, right? Or actually, it
Yeah, I
was the
think we
week
talked about
before.
all these, but I know you did that longer, like, summary post.
Yeah,
This I think it was this week or late last week. So I
it
thought it
was
was good
late
to just
last week. Yeah,
revisit now that you've kind of digested everything.
yeah. So, um, I loved Google's report. So there was so much goodness there. And I'm trying to remember like some of the summary stuff that I did, but yeah, Google crushed it, over $100 billion in revenue for the quarter, which basically puts them on par with like Apple's $400 billion annual revenue run rate. And Google is growing at roughly 13%, Apple at roughly 6%. And in my view, Google's products are, they're not like one or two replacement cycles away from getting replaced. So they're much more solid in terms of like their revenue base continuing into the next, let's say decade, as opposed to Apple. I'm less bullish on Apple, especially because their revenue growth is so much slower. Their price earnings ratio is better than Apple's at 28. Google is in a pretty good position, and they just continue to execute. But stock has also like gone up quite a bit over the past 6 months or whatever it's been since I started buying it. Comparing that to, one thing I think I've been very vocal that I'm like negative about Google is that I think that they have been too slow to execute on their overall strategy. Their overall strategy is not very cohesive. They're sort of like all over the place. They could be much more aggressive towards OpenAI, shut the door on like lots of different areas for them, so that OpenAI doesn't grow and sort of like dwarf them at some point in the future, which I think is starting to happen in that, like, it's not that Google is not going to grow. It's just that OpenAI could grow so much faster that at some point OpenAI could become bigger than Google. This is exactly what happened with Google versus Microsoft. It's not that Microsoft stopped growing, but Google became bigger than Microsoft in terms of revenue. And in some areas, Microsoft became irrelevant, like in search, for example, where Microsoft was not quick enough to recognize the importance of search and compete against Google when it was a tiny little baby, right? And I think this is exactly something that's happening between Google and OpenAI. So contrast that to Meta. I think Meta is also executing beautifully. 26% year over year revenue increase to over 50 billion. Now Meta is at a $200 billion revenue run rate with just basically 3 products. One of them is not even revenue optimized. And then they just continue to acquire the talent for AI. They're very hyper focused. The PE of Meta is now like around 20, which is pretty incredibly low for a fast growing tech company that's growing at 26% year over year. And they don't even have any revenue from AI that they could potentially in the future. And they're doing exciting things around AI. And like their glasses, for example, which the revenue is near zero in terms of, it's a rounding error compared to their overall revenue. If those things become a reality down the road, like where 5 years from now they're selling 100 million glasses per year, that could be pretty substantial. And those are the things that sort of like excite me about Meta. Yeah. Any thoughts or questions there?
No, so
Before
I
we move
mean,
on.
so far with Google and Meta's earnings, there really hasn't been any surprises.
That's right. But I mean, I guess the surprise for me on Meta was how much their top line revenue grew, despite the fact that they don't have a new revenue source. They're just like, yeah. Go ahead.
And that reminds me, you actually bought Meta after the earnings, right?
That's right. That's right. The stock price went down. I mean, like sometimes like the market is like, you have to do a pause and be like, what? There was one-time expenses that caused Meta's EPS to be pretty low, but there was nothing in Meta's report that was a concern, right? So they're stronger than ever in terms of revenue, more revenue than, like, accelerated revenue growth to 26% annualized. And then the stock goes down like 20, what was it, like 10 or 15%? I forget the exact numbers, don't quote me, but it's down pretty substantially. And at one point I'm like, okay, this is one of those mega cap companies that I want to own more of.
And
then
how much? What's your
yeah,
allocation of your portfolios in Meta now?
in Meta, let me look. So there is 7.6%, but largely because it's gone down. What is it? In the past week, it's gone down only 4.5%. So but in the past month, it's down 14%. So yeah, I mean, I think Meta is still very reasonably priced. It's not exceptionally cheap, but a PE of 21, I think is for a mega cap company with a lot of potential, with all the right investments, with being founder led. I like Meta way better than Google or Apple or Microsoft or any of those guys.
Sure.
Of course, Robinhood also reported last week, and they crushed it in like every possible way. Their top line revenue was huge. Their profit was huge. They have like new two new revenue sources that basically hit this sort of milestone of $100 million annualized. So they now have 11 different products that have each $100 million or more in revenue. And of course, the market also rewarded them by punishing the stock on Robinhood. Now, the reason I haven't added Robinhood is because Robinhood wasn't cheap to begin with. So I recognized it, despite the fact that they're executing very, very well. The stock is not cheap. It's still trading at pretty substantial price sales and price earnings ratios that make me be like, oh, okay, I'm happy with where I'm at. I'm not going to be adding some more to it, but.
And are they your biggest holding or second biggest?
Their second biggest, Rocket Lab is my biggest, which also reported. When was it? Monday, if I'm not mistaken. And Rocket Lab's report was absolutely phenomenal. So let me go to Rocket Lab. Let me pull them up real quick. So Rocket Lab was expected to have 150 million in revenue, and they basically beat that by a little bit, 2.5 or 2.7%. They reported 155 million. Their EPS was expected to be minus 10 cents. They beat that minus 3 cents, but that was largely because of a one-time tax benefit. So you can kind of ignore the beat on EPS. What was really fantastic with Rocket Lab's revenue was their guidance, which I'm not sure why this changed to neutral, but they were expected to have a like similar sort of 150 to 160 million dollar revenue for next quarter, and they increased their revenue target to 170 to 180 million for Q4. Now, this is mostly coming from space systems, which is basically building satellites, but also their Electron rocket, which is this $8 million per launch, or $7 to $8 million per launch Electron to put satellites into orbit, is also getting more and more launches and more commitments, despite the fact that they have Neutron in development, the reusable rocket. And of course, there's the sort of Falcon 9 from SpaceX. These guys continue to execute exceptionally well, and then their Neutron is on the way. One negative was that they were hoping all year, they've been guiding that they hope to do their test launch of the Neutron rocket this year, but that got pushed to at least Q1 of 2026. So that was the negative there. People thought that if the Neutron rocket gets delayed, that the stock might take a huge hit. And but Rocket Lab is just executing so well. Their satellite revenue is growing so rapidly. Their Electron revenue is growing so rapidly that you just cannot discount those things, and just because of a 3-month delay, and be like, oh, I don't want to own
And
this.
I feel like it has to be priced in, right? Like it's very common in this industry that there's going to be
100%.
some sort of delay of, especially when it comes to newer technology.
100%. And one of the things that Peter Beck, and I love Peter Beck as a founder CEO led company, just very articulately put, is that no one's going to remember a 3-month delay, but they will remember a rocket that explodes. And then the other thing that, in contrast to SpaceX, so SpaceX has deliberately taken this approach with the Starship program of, hey, we're going to be launching 10 to 20 times before we're actually successful, and most of these are going to blow up. They've kind of set that expectation from early on for people who are paying attention. So I think the headlines are hilarious that they, like every headline is like, oh, SpaceX rocket blows up. But with Rocket Lab, they're deliberately setting the opposite expectation, that like our first launch, better make it to orbit. Like Peter Beck is actually basically saying that. He's like, we're not going to be, oh, it cleared the launch pad and we're going to consider that a success. No, it better make it to orbit. So the second launch, they're wanting to actually put satellites into orbit by their second launch. And I think the second launch is a revenue launch, at least planned to be a revenue launch. So very different expectations there. And if they are successful at that, I think, Neutron is going to make a massive difference for Rocket Lab in the future. So
Absolutely.
again, another company I love the fact that I own. It's not my number one position. I don't, want to trim that at all. There might be other reasons for it. I'm going to have a huge tax bill this year, so who knows what I might do next year. But yeah.
And did you follow ASTS's earnings at all?
I did. So I listened to their full earnings call. And ASTS for me is one of these companies that has, like, if they're able to deliver on what they promise and what they have sold, basically, they have $1 billion revenue backlog, which is pretty incredible. Like, Rocket Lab has a $1.1 billion revenue backlog, but their Rocket Lab's $1.1 billion revenue backlog is for all the things they can do and have been doing. Electron launches, like satellite systems, all of these things that's their expertise. They've been doing it for a few years. So there's no doubt that $1.1 billion revenue backlog will come to fruition. ASTS has $1 billion revenue backlog, but it's all on technology that is largely unproven. Now they have done, single tests here and there of their tech to sort of prove that you can have a phone call via space-based satellites. But to do this at scale for millions of simultaneous phones and to do it worldwide using a handful of satellites, it's just something that has not been proven. And this company doesn't have a track record of proven stuff for us to point to and be comfortable with. Now, if they can do what they say they're going to do over the course of the next 6 months to a year, ASTS might be a severely undervalued company at, like a $20 billion valuation, but because it's going to grow revenues very, very rapidly. But can they do this? No one else has done this. And, is this sort of one of those anomalies that everyone ignored? SpaceX just said, we're not going to do that. Like, or is the technology more difficult than they have led on to be? And that is unknown. That is the unknown risk factor from my standpoint on ASTS.
Let's assume that the technology works. Do you think that they have a strong moat with the partnerships that they're building, or do you think a SpaceX or a Rocket Lab could fairly easily compete with that?
Yeah, that's a great question. So because they have been 100% focused on this and they already have established these relationships with like something like 50 different partners worldwide, by the way, not just in the US. So they have Verizon, the AT&T,
Did you
they have
see
Vodafone.
AT&T was tweeting about them and using the A emoji? Like
I
they were
did.
like all in. It was funny.
Yeah. So I'll give them that like the carriers have 100% trust and belief that these guys can pull it off. So that is a pretty solid endorsement. Um, I'm just not convinced that the carriers know what to exactly look for here. Like it's space-based satellites. There's so many different complexities there that like not everyone is well positioned to be able to evaluate the tech. So the tech is unproven. Until I see otherwise, the tech is unproven as far as I'm concerned. This is a very, very difficult problem to solve. And by the way, like I'll give you one other quick example on the tech. So when we talk about, for example, the closest tech to this is Star, or the closest concept to this is Starlink, with satellites doing laser-based communication to these dishes that Starlink has for high-speed internet. The difference is that technology was proven on the ground, meaning you could get high-speed dish-based internet connectivity locally because there would be vendors that would set up these things on mountains and cover an entire region, like a metropolitan region, using laser guided, and they would just point their laser guided dishes to like a particular metropolitan area, and they would be able to sell these receivers that basically gave you high speed internet through I forget what the exact term was, but the technology is very, very similar. That now, SpaceX just took it to space and is doing that. What ASTS is doing, no one is doing that on the ground. Like most, of this 4G and LTE networks only work within a 5-10 mile radius at the most. So no one is able to do really high number of calls for like 100-mile radius or 50-mile radius even. And these guys plan on doing it for hundreds of mile radius from satellite, and a single dish, a single satellite is supposed to be able to carry millions of calls, each of which are going to have some wattage requirements of power. There's like power complexities. You need to have like solar. I mean, there's a lot of complexities. I'm just not convinced that these guys who have never done something like this before to be able to pull it off. And the delays don't make me confident either, right? Like there's first 2 satellites were supposed to start shipping out to orbit in July. They now hope to have them out in December. So a lot of concerns. But, if they are able to do it, more power to them, because and I'll be the first to admit that, obviously all of my concerns were wrong. And I think that these guys will easily be a multi-billion-dollar revenue company in 5 years.
Let's move on to Rivian. I want to get your recap on their earnings, and then I also want to talk about RJ's pay package.
Yeah. So, I mean, I think we briefly talked about the Rivian quarterly report was good, but it was like, nothing that should have triggered a 40% over a course of a week price increase in their stock price. But this is exactly what I mean by, like, you never know what the market is going to do or when it might reprice something or look at some company in a different light, right? And I think that what might be happening with Rivian is that people might be recognizing, wait a second, their costs are going down, just like they have been saying that they would. Their R2 product, which is profitable, it should be a more profitable, lower cost vehicle, is just around the corner in first half of 2026. That's the expectation that they have set. And this company has been working on AI and autonomy for a few years now, and they're going to demo what they've been working on, with the expectations being set that they're going to demo point-to-point autonomous driving, but hands-free, but eyes on, meaning you have to pay attention, but you can just like sit back and kind of relax, kind of like you do in Teslas today. If they can demo that on December 11th, it's a game changer, in my opinion, for how this company might be perceived by the outside. And some other people might be recognizing that, and that might be what's driving the price up. So I'm quite excited about that.
I have a different read why the price is moving.
Go for
I
it.
think the market heard you got an invite to Autonomy Day, and they thought that was very bullish.
I would love for you to be able to stroke my ego in that way, but I am excited for Autonomy Day. I think that, by the way, the invite actually says that there's going to be, after the keynote, which is an hour and a half, and they're going to live stream the keynote, they are going to also do hands-on demo for the people who are there. So there's a possibility I might be able to be in a vehicle that does this autonomous driving stuff. So we'll see. I'll definitely be talking about it on December 11th.
Can't wait to hear about it.
Just booked my trip. So yeah. What else should we talk about?
So what are your thoughts on RJ's new pay package?
Oh, pay package. I mean, this is going to be the new future. Is you should, I think we're going to start seeing these pay packages for everyone. Jensen, I mean, like basically everyone's going to get these multi-billion-dollar pay packages that was unprecedented until Elon.
Does
But
it change your view on Rivian or make you, I don't know, less enthused about the company?
no, not at all. And by the way, Elon's pay package doesn't make me less enthused on Tesla. It just makes me like not like Elon as much. He already owns 13% of the company. He sold 10% of the company just a few years ago, and he wants those shares back. I just think that that's kind of like a silly way to operate. In RJ's case, he doesn't have the number of dilution rounds that they went through makes his current position, I think, only a couple percent, if I'm not mistaken. I could be wrong about that. So he owns a much smaller chunk of Rivian. He also went through a divorce that sort of halved the number of shares he owns recently. So I feel like it's more justifiable, but also $5 billion feels like unjustifiable in general. Um, and by the way, don't get me wrong. I think that pay for performance should be the standard compensation method of CEOs, and all the tranches and goals that they have, both in the Tesla compensation package as well as Rivian's, are the way that I think things should be. But I think CEOs should not, in Elon's case, should not earn a million times the average pay of the rest of the employees. Maybe 10,000 times the pay of the average employee would be sufficient, but a million just feels like a little excessive, maybe 100 times more excessive than it should be.
Gotcha. I think we should go to some listener questions because I know we've been getting a lot of them in today.
Yeah, let's do it.
Oh, we have someone
Oh,
who
hi.
hi. I'm just mentioning this. They want to have a podcast notification before an hour before it starts. So
Gotcha. You can always rewind in both YouTube and of course after the fact, you can listen to it on the podcast on either Apple Podcasts or Spotify. But if we send out notifications too soon, they get missed. And then I today forgot to send out the notification until like we were 10 or 15 minutes into the podcast. So that's my bad.
Yeah, and I think YouTube can notify you after you subscribe. There's like a bell icon or something.
Oh, you might be
I
right
don't
about that.
I don't know what the settings are though. Like if you could set it up to notify you like immediately once it's scheduled or whatnot.
But you can definitely go back and watch the Bumble.
Yeah, and we did talk about Bumble just to
Yes.
clear.
okay, next one. Can Dustin go into how he prices his buy-ins? Like how he said Bumble buy-in was around 523 and then
Finally, a
423.
question for me.
What
Unless
goes
if it was a
into those
typo.
decisions, Dustin?
Let me take this one. Just kidding.
You got it, Hamid. So this is, I think, an area where Hamid and I differ, where I definitely look at the price action and more so the price history. I take into account. So if I'm very excited about a stock, and depending on how much cash I have on hand, I'll just and I'll buy an opportunity that comes to me. In this case, I'm actively trying to build up my cash position, and I'm very happy in my other investments. So I didn't feel like I needed to be in Bumble, but it was, if it was at the right price, I'd buy in. So the way I came up with the 523 and the 423 is I'm looking at the previous price history, and I kind of view it as a map of what are the probabilities of where the price can go. So like the longer it spends around certain ranges, the more likely it could go to that range again. Doesn't mean it has to. Often it doesn't. Sometimes it does. But that's how I like to look at it. Same thing with like if there's consistent support or consistent resistance, like if the price just can't break a certain level or it keeps stopping at a certain level. That's another indicator of like it doesn't even have to hang out there for too long of where the price might go. So in this case, I was looking to see where a lot of price action was, because I think when I was originally set these targets, Bumble was around like $7, $6, I
Oh
think closer
wow.
to 7. And you know, when I'm setting them, it's like I'm like, it's probably not even going to go this low, but and I like to do multiple because then you know, if I just did the 423, there was a chance it would absolutely never hit it. So I don't like to get too greedy typically. And the last point I'll make, which I brought up an episode or two ago, is I don't like to do whole numbers. So like really, there was a lot of price action around $5 and a lot of price action around $4. But a
Right.
lot of people are eyeing those positions. And look, Bumble, I believe, is under $3 or under $4 right now. It's at 391. So like I could have been greedy and like that would have been better for me, but often I get burned that way. So I'm more than happy to pay a little extra and know I have a higher chance of you know getting in.
Very cool.
Thanks for the question, Grant.
Okay, we're going to Bumble. Is Bumble becoming, well, we're continuing with Bumble. Is Bumble becoming a takeover target now? And what a takeover target likely would the share price be?
Okay, this is a great question because at these prices, I think you would have to be a fool if you were the CEO of Match or Grinder for that matter, because they have such a high market cap, and not look at Bumble as a potential acquisition target, where even if you paid 100% premium on the stock price today, that's $8 a share, roughly speaking, that you could take out a major competitor, uh, do economies of scale by eliminating all the redundancies, people who are redundant in the two companies, bring Bumble under the, let's say, Match umbrella, and add roughly 850 to $950 million of revenue to your revenue run rate, couple $100 million of profit, bottom line profit, for a cost of about 800 million plus the $600 million of debt. Let's say 1.4 billion. That just seems like a no-brainer to me, and I would think that that is a very possible outcome. Now, there is this sort of like unknown that like obviously Bumble may not want to sell, so they could be like, Match might be approaching them. They would be like, go take a hike. We're going to do this on our own. So if in that kind of a scenario, a hostile takeover is a possibility, but a hostile takeover is messy, and I think that companies generally avoid that. So some of those conversations may be taking place, and we just wouldn't know about it if it is. But yeah, the answer is that like it could become a takeover target. Yeah, let's go on to the next.
Okay, so continuing with Bumble, what do you think about the fall of paying users? I didn't expect so much.
Yeah, so I mean, basically, Whitney set this expectation of lower number of paying users because they're focused more on quality. But the fact that those paying users are paying more on average per user may even be a good testament to the increased or improved in quality, because those users are willing to pay more. So that part wasn't a huge concern as much as the Q4, for me, the Q4 guide, because I thought that most of that user drop had already occurred, but it hadn't. Only half of that, half of the quarter had contained the new features that would cause a user drop. So it turns out that the brunt of it is going to be taken out in Q4. So there's going to be more user drop essentially happening in Q4. Do I love it? Of course not. But this was part of the expectations that Whitney set when she came back.
Okay, let's do this last one. Why I cannot find Dustin's portfolio in Savvy Trader.
Getting a lot of love this episode. I don't know what I said, or maybe it's the perfume I put on, the pheromones. You can go to savvytrader.com/Dustin, and then it'll pop up. The exact link is savvytrader.com/Dustin/RVR for risk v reward. My portfolio is free on there. Hamid's portfolio is free on there. And yeah, you should definitely check it out.
It should also be, there should be links in all of our past videos on YouTube as well.
Yes.
And it'll be on this one once we process, or YouTube processes it and we get to update the comments. But the reason you don't find us in the directory is because we don't list free portfolios on the directory. So just FYI there.
Yeah, it's only the paying ones.
Yeah.
Well, I
All
think
right.
this is a great episode.
Sorry, Dustin.
There you
Yes, I think we can call this episode.
All right. Awesome. Well, thank you very much, everybody. Thanks,
Yeah,
Dustin.
thanks for
Thanks,
listening.
Adrian.
Thanks for subscribing, liking, commenting, subscribing to our
5 star.
portfolios. There's 5 stars. There's so much to do.
4 star. Go give us 4 star. I want 3 stars.
Hitting the bell notification. So much to do.